Hey everyone, welcome back to Corporate Decoder, the place where we decode the financial complexities of the business world. And today we are diving into a fascinating report from Midland States Bancorp, Incorporated, which seems to have some interesting moves happening behind the scenes. Before we dive in, if you are new here and love getting these straightforward breakdowns of corporate news, make sure to hit that subscribe button. And for all you returning viewers, don't forget to join our Discord community, linked in the description below for even more in-depth discussions. Alright, so we are looking at a Form 8K filing from Midland States Bancorp Incorporated. Now this form is typically used for reporting significant events that shareholders should know about, and this one has a particularly timely feel to it. The company Midland States Bancorp Incorporated is telling us about a pretty significant transaction involving its banking subsidiary Midland States Bank. This transaction is being announced on the 1st of December 2025 and involves a major chunk of their business. So what exactly is going on here? Well, in simple terms, the bank has sold off a big part of its equipment finance business. They are calling it substantially all of its equipment finance portfolio. Think of it like a bank having a department that loans money for equipment, and they are selling off that entire department. They sold this portfolio to a company called North Mill Equipment Finance Incorporated. Two key pieces of information are being released here: a press release announcing this sale and an investor presentation which gives more details about this deal. Now let's get into the nitty-gritty of this sale that happened on the 28th of November 2025. The bank sold off its equipment finance portfolio and some other related things to an affiliate of North Mill. The price tag on this deal was a hefty $502 million in cash though. It could be adjusted a bit. As of the 31st of October 2025, this equipment finance portfolio was worth about $599 million in loans and leases. After accounting for potential losses, it was closer to $565 million. Importantly, the bank is holding on to about $75 million of these loans and leases. This means they are definitely streamlining their operations and focusing on other areas. In this sale, the bank made some usual promises to North Mill. These include things like keeping information confidential and agreeing to help out during a transition period. Now here is where things get interesting for the company's bottom line. They expect to take a hit on this sale. They are forecasting a pre-tax loss of around $20 million in the fourth quarter of 2025. This loss would include all the costs associated with putting this deal together. So what are they doing with all that cash from the sale? Well, they plan to use most of it to pay down a significant amount of their wholesale funding. That is $350 million worth of funding. This is a smart move to reduce their debt and strengthen their financial position. By paying down this funding, they are essentially reducing their interest expenses, which can be a big deal for a financial institution. Now, every company filing includes what they call forward-looking statements. This is basically the company telling everyone that the future is uncertain, and that things might not turn out exactly as they expect. They are warning investors about the risks involved in this transaction, like unexpected costs, changes in interest rates, and general economic conditions. It is their way of saying, hey, we are optimistic but things could change. They are also very clear that they do not plan to update these statements if things do change. And finally, the filing lists the exhibits. We have the press release from the 1st of December 2025 and the investor presentation from the same date. These are the documents that provide the public explanation of this deal. There is also a mention of an interactive data file, which is basically a digital way to process this information. So what does this all mean for Midland States Bancorp? Well, on one hand, they are making a bold move to shed a part of their business that might not be performing as well, or that they feel is better managed elsewhere. Selling off $502 million worth of assets is a significant strategic decision. The $20 million pre-tax loss indicates that perhaps the carrying value of these assets was higher than what they can get in the market right now, or there are significant transaction costs involved. However, the immediate plan to use the proceeds to pay down $350 million in wholesale funding is a really positive sign. It shows a clear focus on improving their balance sheet and reducing financial leverage. This could lead to better profitability down the line as they save on interest payments. We need to watch how this impacts their overall revenue and their ability to grow in other areas. The risk here is that they might be selling off a revenue stream without a clear plan to replace it, or that the remaining business units can't pick up the slack. The market will be watching to see if this deleveraging strategy pays off in terms of improved financial health and shareholder value. They are certainly making a significant shift in their business strategy, and it will be interesting to see the results unfold in the coming quarters. Alright, that is our breakdown of Midland States Bancorp Incorporated's latest filing. What is your take on this sale and the company's strategic shift? Let us know in the comments below. If you found this analysis helpful, please give this video a thumbs up and make sure to subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description for more exclusive content and discussions. Thanks for watching. We will see you in the next video.